This is the MTPredictor weekly update for December 18th. So it's our last update before the Christmas holiday. And we'll kind of go through the markets here a little quicker. Not a whole lot transpired last week. We'll get into some other stuff on kind of intraday stuff that we look for using MTPredictor. So here's the S&P on the weekly time frame. For some reason last week's candle's not showing up here, but you can see we sold off a little bit on last week. You can see the red candle here, last week's candle. For some reason it goes away, but just to show the progression, again, we had our major top here where our DP sell signal came in after a 5-wave pattern up. We then went with a 3-wave pattern down into wave 4 with the close above the wave 4 resistance area here. Again, they have not been able to take that out in the ES. That is 1289.25, and until they do, the market will go sideways to lower. We do have a little ABC pattern that's forming, or at least wave B here, that came in on the week of November 25th. We started progressing towards the this minimum wave C target here. Here's a decision point off the prior swing resistance area as well. That's right in the midst of that 1320 area. Resistance will start though around 1295. So we've got all that resistance there. Again, as you can see, we didn't hit that last week. We actually sold off there. So we'll see if it can continue to progress into the holiday this week. It's probably going to be obviously a shortened week, but a light volume week as well. But sometimes markets can get pushed around a little easier. If you get more buyers and sellers coming in, it can kind of trend things, or sellers and buyers can trend it in the other direction as well. But so until we take out the high of this, we're not going to test any of these prior swings here. And we do have now, once this swing was in, we do now have some additional resistance areas here before we get to the next prior swing, which was wave 2, or the wave 5, minimum wave 5 back here, which was back in the week of May 6th. So not much has changed. I guess that's the thing. Until this gets taken out, we've just seen the markets kind of gone sideways to lower, and we get the bounce here on wave 2, or I'm sorry, wave B, heading potentially into wave C, but it hasn't gotten there yet. And to get there, they got to take out this swing high, which they just haven't been able to do. If we look at Goldman Sachs, again, there was a buy signal. Now it's on a red STF, so it's not one of our standard trade setups. It would be against the trend, so it wouldn't be one that our new traders would be taking. But I put it on there so you could see the targets. And the real critical thing on Goldman is it's telling us that the market is moving lower. I just see what Friday. It did on Friday here. I'm just going to load Friday. It won't stay on the chart for some reason, but so we went even lower. 90.10 on Friday was the close. All right, so here's our $100 marker in Goldman. Below $100 is bearish for the overall markets. Above 100 would be bullish. You can see it's come up above $100, but it just can't hang on above there. So that's a big negative for the overall markets. All right, let's look at some of the other markets here. Our short in silver, we had the TS3 back on the 28th. The sell signal with the red seller's bar. Trend was neutral to lower, and you can see it's hit this first what we'll call decision point support off the B swing here. So we had this ABC pattern in silver. Came right into our minimum wave C resistance, generated the TS3 sell signal. It's coming. The actual target is down here. If we put this on the chart, you can see, which is almost a 10-to-1 risk to reward. target at 25.07 in silver. We take a DP off the B swing because we know there's going to be some support here in between our entry and the target. And in fact, if I print Friday's close on here, Friday's trading range, you can see we actually got a buy signal in the other direction, but it's on a red STF, so it's something that we're going to ignore as far as trading it. But we are aware that we also have decision point support and a little ABC pattern support in here. And so we got a little bounce here on Friday with our blue buyers bar here as well on Thursday. So we'll watch that, but again, this trade is protected. Any stops can be moved to the entry there at 34.72 for a risk-free trade. So either and you can we talked about this in a trading room during the week, that you can take profit here or partial profits in here as well. And the reason being is if we look at the risk reward even to this decision point target, you can see it's a very healthy, almost 6 to 1. Alright, so that's the story in silver. And of course gold on the daily chart, breaking down as far as we got to close below the 200-day moving average, and that low got taken out. Now on Friday's trading, we had a little bounce there as well. So not back above the 200-day moving average. And we haven't seen that in a while. Even on the daily chart, that gold closes below that 200-day. You can see how the 200-day here for the last couple years has really held pretty well. Here was the last real close test of it. Didn't really even get down there. Nice TS4 buy signal there. That particular trade was a 12 to 1 winner. A huge trade. Just financed 12 losing trades on that one trade alone there. But you can see this 200 period moving average or 200-day moving average has really held. Like I said, we can go back. Another buy signal there. It was nice. You can go back. This is January of 2009 was the last time the 200-day got violated. If we go to the weekly chart, so gold in a bit of a transition here, but if we look at the weekly chart, we'll see, alright, it's really just, again, we lost the candle from last week here, but it tested the 50 period moving average on the weekly chart, and here's the 200 period down here. And you can see the last time we even came close to the 200 period moving average on the weekly chart in gold was back in October of 2008, of course, when the markets were crashing. We got a nice decision point market bottom buy signal there. And so and we can go back all the way back, just a mistick there. This goes back basically when the 50 period crossed the 200 period on the weekly chart early in 2002, and the bull market, you can say, basically started after 9/11 in gold. So this is still a very strong trend intact when we look at the weekly chart. And we've seen periods where gold has come below the weekly 50 period to come down near and test the weekly 200 period, and this trend was still in a bull market, still in gold. So right now we're just really popped down to the weekly 50 period moving average is really all that's happened. So it's possible we could get a test of the 200 period and still have the overall trend in gold still be intact on the bigger time. We're talking the bigger time frame here. We'll just take a peek at oil. Oil, I might have to update this chart as well, a little manual. But you see we were in that wave 4. It was on its way to wave 5. It's just now closed Friday right in the made a little ABC pattern right into the minimum wave C support there. So we'll see if that holds. We get a little blue buyer's bar on Friday. We'll see if they can start working their way back up towards that $100 level. If not, if we get a close below this area, then we may be starting, it's just could actually end up being wave 3 instead of wave C. We'd see wave 3 down here somewhere in oil. And let's just take a look. Where's my dollar chart here? Now the dollar, remember we talked about that I felt that we'd have, this was our, you can see the pattern here, 1 into 2, 3, down to 4, into minimum wave 5 resistance. I felt like the up move in the dollar was not over, that we should at least see this DP and potentially this DP. This DP comes off of this, which was the last swing into the major swing low. So that's a big attractor up there, and we can see if I plot Friday's weekly candle in the dollar that we did spike up into this first decision point. There it is. Alright, so we did hit that last week in the US dollar. Of course, we saw on the euro. In fact, here was a TS1 sell signal in the euro back on October 27th. That was good for 8 times the initial risk. So very, very good trade. But we expect that we're in kind of a support area in the euro, and we'll have to see if it does try to bounce, at least stabilize down here, and which may cause the dollar to back off a bit as well. We'll see before it makes another potential run to the upside, the US dollar, and maybe some more pressure in the euro. We'll see. And finally, let's just take a look at some of the analysis that we do intraday that might be helpful. And I'm going to get rid of, this is a 15-minute chart of the S&P E-mini. I'm just going to get rid of the Friday's trading. So this was Thursday's trading in the S&P E-mini. And what we do before the market opens the next day, we take our decision point tool, which tells us the next major support and resistance areas. I use that tool and I click on the prior swing highs and swing lows, and it gives me an area of resistance ahead of time before the market gets there. So if the market comes into any of these areas, it will determine how we play on the smaller time frame. So if the market comes into this area, then we no longer want to be buyers. We want to look to be sellers of this market. We'll go down a lower time frame, and we can also put on the swing lows. Here's our major support. So we've got these areas marked out ahead of time before the market opens the next day. And the other thing is I'll look at is, does the market gap up or gap down, and is it an inside gap or outside gap? We'll look at that on the smaller time frames. So this market gapped up. Let me remove this little one here. It gapped up right into our decision point resistance area. We'd look for a red seller's candle telling us where the sellers are overcoming the buyers. Alright, and we'd be going down to the lower time frame, because now we're saying we're not looking for long trades anymore, we're looking for short trades. The other reason, if I go down to the 3-minute of the ES here, clear this off, pull this up. Okay, so here's the same action on the 3-minute chart. Make this a little bigger. Here was the Thursday's close, Friday's open, and if we look, I'm going to put a high tag on the, I'm going to place a high-low tag on the previous day's high, and we'll look and we'll see how the market gapped up, but it gapped up inside the previous day's high. So we call it an inside gap. What we're expecting is inside gaps tend to fill, meaning where they open, they tend to fill that distance between where they closed the previous day. And so what we look for is the market to move into an area of resistance where we can then be sellers. What we saw on the 15-minute chart, that's in this area. So we have an inside gap telling us this gap is probably going to fill. It's a matter of now finding the resistance area. Here it is. We go down to the lower time frame. Let's see if we can put that same resistance on. So we'll take the swing here and use our decision point tool. Get over, market opens. I'm waiting for it to come up into this area. Let me stretch this out now, focus on that day. And let's forward this. So market comes in. We've got our first red seller's candle. We could look to go short a tick below that low of that seller's candle, but we get a higher high, so we've got to wait for a new red seller's candle to come in telling us sellers are overcoming buyers. We get it here. We can then set up our trade. We're going to go short a tick below the low of the red seller's bar with our stop a tick above the high, and we can initially look and see what kind of risk reward we have to the gap fill. It's about 6 to 1 there, so that certainly will work. We could take a DP off this prior swing from that morning to give us an area where we should expect some support at 12.15 in the ES. This candle, let's look, the low 12.2275, take us in and then stops us out. We're going to lose the 350. We get a new red seller's candle. We're going to reset up that trade. We'll show you how the risk reward works to the gap fill here. Okay, so the new trade is a short at 12.2325. So we lost on the first setup there. We got a new, in fact, a nice little transitional candle there as well. Again, about almost 6 to 1 to our target. And we can see how this played out. So we finally did, in our resistance area, looking for that gap to fill. It went actually just beyond the gap fill. In fact, as the market was coming down here, we had strength in our STF where the oscillator got into the gray band, so we could actually be trailing with the trailing stop, the red dots above price here, and you'd be stopped out right in the same, right basically where the gap filled. So a lot of times the tendency is once the gap fills, the market tends to move back away from the gap. So anyway, very nice setup there, but this is why, you're going to have losing trades. The first time you might have went to set that up, you lose, the $300 or $400, and then the second time you set it up, and you make, almost 6 times your initial risk, or about $2,200. So not bad for a day's work there. Anyway, hope that's helpful. And I probably will not talk to you before the holidays here, so wish you all a Merry Christmas here in the States and around the world where you celebrate. Happy holidays, and we'll see you back after the holidays, and we'll do it all again.